So in today's live stream, we're going to start by looking at the US dollar. So yesterday we have a lot of high impact news yesterday that caused a lot of volatility into the marketplace and some key levels that I was watching previously. Because if we're looking at the current price action, the current structure in the marketplace, as you can see, price has been trending to the upside right here, creating higher highs and higher low, higher highs and higher low, and then right here a higher low, and then we created this higher high. And after that, we saw this break of structure right here. We're currently on the 4-hour time frame, and we're working with the current structure in the marketplace. And right here, in as much as I was anticipating for price to potentially rally above this liquidity or mitigate an inefficiency right here or this other key level. So right here was my first point of interest, second point of interest. Then my third point of interest was for price to potentially rally above this high if it wants to take more liquidity. And the reason for that was because of, if we go to the daily time frame, the reason for that was because of the bodies of the candle resting right here. So I was anticipating that for any reason, if price wanted more liquidity, I wouldn't be surprised to see price want to mitigate the bodies of the candle, taking this liquidity. But right now, let's work with what we're seeing in the marketplace, because we're trying as much as possible not to predict what price is going to do. And in order to do that, we're working with what we already see in the marketplace, which is a higher high, higher low, higher high break of structure. After this break of structure, we're looking at the last impulse move before the drop. This right here was the last impulse move before it dropped that potentially broke structure. Right here, in as much as price wicked this low, there wasn't a close. So in my opinion, I never regard this as the break of structure. This is the break of structure. Now, after this break of structure, this is my key level that I'm working with. This right here is my key level. I'm working with this right here because it was the last impulse move before it dropped, broke structure. In as much as this impulse move right here dropped down below this low, but there wasn't a break of structure, because I would like to see the candle close. If there's no candle closure below the low, I don't regard it as a break of structure, and I don't consider this key level as my point of interest. So this right here is my point of interest. And as you can see, after we broke structure, we had this lethargic price action, consolidation. Price came to the upside, took liquidity from the high that broke the structure, and then went to the downside, rallied again, took liquidity from that candle that broke structure, mitigated the inefficiency resting right here. After that mitigation, we'll have a low, we'll have a high, and then we'll saw another break of structure right here. So after breaking this second structure, a low, a high, a break of structure, we left this inefficiency right here. I'm gonna make it a different color. So right here, you can see how we came to the upside, mitigated the position. The first time, displaced to the downside, rallied, took liquidity from here, mitigated the position. The second time, then we saw it drop impulsively. Now, if I want to take a trade off a key level, I like to see an impulse move, a displacement. If I'm buying, I want to see an impulse move, break of structure. If I'm selling, I want to see a displacement like this. I like to see this. For me to be confident that that key level is going to hold, I like to see this huge displacement candle. And right here, you can see after that mitigation, we saw this displacement. All I would like to see from that key level would be a 15-minute shift in market structure. And right here, we'll have a low, we'll have a high, and then we'll have a break of structure. right here is the low. But if we are to work with the overall swing low, right? The overall swing low, this is the swing high, this is the swing low, this is the swing high, and then we broke structure. So after this break of structure, the next thing we're going to be anticipating is for price to come for a retest and then potentially continue to the downside. As long as we're bearish on the dollar, like I said, my overall market direction on the dollar remains to the downside. I'm still anticipating for the dollar to continue going to the downside. We mitigated this inefficiency. This inefficiency is the first key level, first point of interest that price could potentially reverse from, in as much as I still want to see price potentially come deep into this position before continuing to the downside. But I wouldn't still be surprised if this key level acts as a resistance zone to potentially send us to the downside. Because if we're working with the 1 hour time frame, this right here is our entire point of interest for a continuation sells on the US dollar. This is our entire zone. So all we're waiting in here is for 3 minute shift to market structure. Potentially, if the market is going to give that to us before continuing lower, that would be amazing. Even though it's not a high probability that it's going to happen. Price could potentially just come in here and then continue lower. And if we do continue lower, this right here is going to be my next draw on liquidity. And after this low gets taken, the next key level will be right here. This will be my next draw on liquidity. So after this analysis, we're going to be wondering, so how does this affect euro? What do we expect to see on the euro? Now we'll go to the euro. Same analysis is going to be applied on the euro as well. So you can see basically on the euro, I already had everything outlined. I wanted to put this out as well, but I'm just waiting for more confirmation on this one. Is a 1:5 risk to reward ratio on euro. So two things I could do is either I put this out for a 1:5 risk to reward ratio, or I can just wait for more confirmation. And more confirmation simply means that when price comes in there, I could potentially be looking for a smaller time frame shift to market structure, like I said right here, 3 minute shift to market structure, and then take the trade. And it's gonna be a much higher risk to reward, because that could deliver like a 1:7 or 10 risk to reward ratio. But I'm also gonna run you all through the analysis why I chose this area as my key level. I'm just gonna use a blank chart to do that so everyone can understand the reason why I'm looking at a particular key level. So my overall market bias remains to the upside. Reasons: number one, we have a low resistance liquidity resting at the upside. So firstly, we have this low resistance liquidity resting right here. Secondly, price mitigated this inefficiency on the monthly. After that mitigation, we'll go to the weekly. We can see that on the weekly, we still have low resistance liquidity. Then the next thing, if we use our Fibonacci from the overall high to the overall low resting right here, you can see how nicely price came into the discount zone. And after tapping that discount, we saw that rejection from that key level. And look what's resting at the discount position and inefficiency on the weekly time frame. So you can see that the inefficiency is resting directly above the equilibrium position. And that is why price needed to mitigate the entirety of the inefficiency, dig into the discounts. You see how these things align. Now, overall, we're looking for buys on Euro US dollar, and then price comes into a weekly inefficiency and then dips into it to mitigate the discount zone. Now, in as much as we have this high right here, we have this high, and then in as much as I wanted to see price dig a little bit deeper into this key level, at least to the bodies of the candle, but we didn't get that in this case. So price just was really so bullish that it didn't even have the patience to dig deep to mitigate the bodies of the candle or the last down close candle before an expansion. Price was really so much in a hurry to continue to the upside. So that is the reason why we saw it come here, mitigate the wicks, expanded higher. And right here, we have this last down close candles, which is our next point of interest. So whether this key level is going to hold or not, we do not know whether it will, and we don't know whether it won't. The only thing we know is this is a higher time frame point of interest. So all we do now is we mark out this zone and we wait for further confirmations. So all we want to see from this key level is a break of structure on the 30 minutes time frame. So if this key level is going to hold, we want to see a 30 minutes break of structure. If we do not see a 30 minutes break of structure at this key level, then it means that it's most likely not going to hold and price could potentially continue to the downside. Does that make sense? So if we don't see a break of structure on 30 minutes time frame right here, we'll just be on the sidelines because it means that price will continue to the downside, potentially to mitigate this key level. But if we do see price come into this position and then it comes in and then we see a 30 minutes break of structure, we wait for a retest and look for smaller time frame confirmation and get into a buy, and we'll be targeting this overall highs. Does that make sense? Because overall we're still bullish on Euro US dollar, and we're not trying to take any retracement trades. We're only focusing on the overall market direction. It's bullish, so we're looking for areas price could retest and continue higher. Now, that being said, we now go to the 30 minutes time frame to see if there's a break of structure from that key level. And as you can see, after price mitigated this key level, we created a high right here, as you can see very clearly. We created a low, and then we broke structure right here. So you can see that very clearly. Right here, we have a break of structure. Break of structure, very evident right here. After the break of structure that we can see that is very evident, what is our key level to take note of? The last down closed candle. Right here is our point of interest where we'll be waiting for price to mitigate this position. If it's going to take a day, if it's going to take a few hours, we'll be very patient waiting for price to come in here. Once price comes in here, This is what they call one shot, one kill trade. Once price is in here, we're looking for a 4 minutes break of structure. So once we see a 4 minutes break of structure, we get into buys. So this is what I'm going to be watching on Euro US dollar. So the moment we see price coming here, we're looking for a 4 minutes shift in market structure. Once we're in here, we're looking for a 4 minutes shift in market structure. What is it going to look like? I'm still going to show you what it's going to look like. So right here, all we don't know which particular area price is going to mitigate. We don't know whether it's going to be hunting for this liquidity, or it's just going to come in here, tap this key level, the open, and just reverse. We don't know that. Nobody knows that. So all we do is we're going to be watching this closely on the 4 hour time frame. I'm going to have it on my chart on the 4 hour time frame, and I'm going to be watching how price will be creating structures on a downtrend, and then the moment I see its break going from downtrend to an uptrend, what I'm going to do is I'm going to use the high. I'm not going to use the inefficiency this time. The reason is because price is very bullish. And in the case where we're very bullish, it's very, very, very essential to take note that anything can happen, anything can push price to continue higher. And if you're trying to be too nimble, waiting for price to mitigate extreme levels, once structure is broken on the smaller time frame, you're most likely going to miss out on the trade. Yes, price could decide that it wants to come back in, which is amazing. It's going to fill you in, but trying to expect that to happen all the time, you're going to miss 5 out of 10 trades in this kind of situation. So in this case, I'm going to try as much as possible to make sure that the entry is as close to the highs as possible. I'm not going to use any inefficiency within the zone. I'm going to use the high because the high most likely is going to get filled. So if you're getting in on the trade, you can even add an extra pip on your trade when I put this out as well, just for spread, because I don't really know what broker you're using. I don't know their spread, and your broker doesn't want you to get filled if price is gonna if trade is gonna go towards your direction. Your broker wants you to not to get filled, because if you're getting filled, you're making money and they have to pay you. So that's how it works. So you need to make sure that your entry, you add an extra pip to your entry. So this is what I'm going to be anticipating to see in the marketplace. And if we do eventually see price coming here, that would be amazing. And we'll get into buy setups from this key level for price to continue to the upside. So that is my analysis and what I'm looking forward to see on the Euro US dollar. I'm going to be watching this all day. I'm not going to be watching any other setup for today. This is all I'm gonna have my eyes on for today, because it's literally the end of the week. Today is Thursday. We're literally at the end of the week by tomorrow. And if we're able to get into this trade, it's gonna be amazing and we can rack up some more money. So that is my analysis. So for USD card has really had a very weird price action, to be honest. I wanted price to mitigate this key level before dropping, but as you can see, it didn't get into that position and then it dropped to the downside. So personally, I wouldn't trade this. I'm just gonna be on the sideline for it, because with how I trade my strategy, it's not really aligning well with my strategy. And the thing to understand about trading is it may not align well with my strategy, but it may be aligning perfectly with another trader's strategy, which is amazing. You know, personally, it doesn't align well with my strategy. It didn't mitigate my position, and I wouldn't really be comfortable trying to buy it or sell it from here. So I'll just rather be on the sidelines for euro. Yes, you're right, Peter Mosey. There's a lot of high impact news today, which means there's going to be a lot of volatility. We have another medium impact news on the euro by 9 o'clock. So, uh, wait a minute. I think that's already passed now. So we've had four high impact news on the euro this morning: 8:15, 8:30. Medium impact news by 9 o'clock on euro, and by 9:30 we have high impact news on pound, and 12 o'clock high impact news on pound as well. 12:30 we have a high impact news on the dollar. 1:45 high impact news on the dollar as well. So now what I do when there's a lot of high impact news is I try not to trade a retracement. I only focus on the overall market direction. So if the overall market direction is bullish, I'm just looking for buys. That is the reason why, in as much as I was anticipating for euro to go to the downside like it did recently, like it did this week, in as much as I was anticipating for this to happen, I didn't look for any sell because I knew that with the high impact news, something like this could happen. And if you were taking a retracement trade, you would have been wiped out. So I try not to engage in such price action. I prefer to trade overall market direction, which is this. So, and that's still the reason why I'm still waiting for price to come in here and then continue buying it to the upside because the overall market direction is bullish. So rather than trying to trade the retracement, I'd rather take a continuation buys. So the thing is, how I play with the high impact news is by following with the overall trend. You know, even if you take losses trading the overall trend, you'll see that out of 10 trades, you're going to end up being profitable. And another thing is, in as much as there's going to be a lot of high impact news, we also need to not allow it to scare us out of the market because it brings in volatility, which makes the trade volatile. If you're wrong, so if you're wrong with your analysis, you could get wiped out. That's why when I see a lot of red news like this, I only trade with the trend. And that's part of the reason why I'm not trying to take any trade on USD card for now, personally, with my strategy, because overall I'm bearish on USD card overall, but you can still catch a buy on it. And more, what makes me just want to take a step back from trying to trade USD card now is because, as you can see, we have a significant break of structure, which means we're bearish. And this is my point of interest. And you can see how many times price has come into this point of interest and it's just been rejecting of that key level. But at the same time, after every rejection, it comes back, goes higher, rejects again, comes back, goes higher, rejects again. I don't really like such price action. And maybe it could still continue higher because we came to the downside, took this liquidity. So let's see if there's a 30 minutes break of structure right here. So after taking that liquidity, so this is the overall high, the overall low on 30 minutes time frame. And right here, structure was broken. So this was the last down close candle before an expansion. So the bodies of the candle is going to be my key level. So two things I'll expect price to do: either come into this position, mitigate it, continue higher, or want to run this sell side because this is low resistance liquidity. And if we run it, I'll look for a 4 minute shift of market structure for buys. This is what I would do if I wanted to trade it. And right here you can see how price came, took liquidity. Now let's see if there's a 4 minutes break of structure right here. We can work with 4 minutes or 5 minutes break of structure. So you can see that it actually aligns perfectly for a buy, and we'll have a high, a low, a break. So if I wanted to take a trade on this, I'll most likely prefer to take a buy, even though I wouldn't want to do that. But if you all still want us to take the trade on it, yeah, It's not going to be a bad trade in a way, if you ask me. It's just I don't really like the price action, but this is what I would do if I was to get into any trade on USD card. It would be to still buy it to continue higher. So in order to play safe, what I could do is the stop loss is almost 10 pips. I can add extra 3 pips and make it 13 pips overall. Right here would be my stop loss, and my take profits is still going to be me expecting this to continue higher. So it's a beautiful 1 is to 11 to risk to reward trade, if you ask me, you know, like low resistance. So it's a beautiful 1 is to It's a beautiful 1 is to 11 risk to reward trade. If you like the trade, here is the setup. This is the entry. You can risk 0.1% on it. If you're wrong, you lose 0.1%, which is nothing. If you're right, you make 1% on the trade, which is really nice. So if I wanted to get into this trade, this is what I would do. If I was to choose a side, whether to buy it or to sell it, I'll choose to buy it. And the reason is because low resistance, inefficiencies. And on the daily, we've just not had any significant. We're already right here, we're still trending to the upside, and we came to the downside, took liquidity from this low. So I wouldn't say there's been a significant break of structure, in my opinion. And after taking liquidity, the next thing I like to see in this key level is a 30 minutes break. And if I see a 30 minutes break of structure, right here, I'll be looking for a retest and continue higher. And right here is my overall drawn liquidity on USD card. So maybe I'm going to post this, maybe I'm going to share that with you. Maybe I won't. I don't know. I'll just look at it a little bit more and make my decision on what I'm going to do. But if I'm going to take this trade, it's going to be with very low risk because it's not really the best kind of trade that I like to get into, to be honest. But it's a trade that could potentially play out eventually because everything price is doing right here is just playing around. It's just playing around, and right here we'll have a high, a low, and this is a break of structure. And this right here was the key level. I was watching this key level last week to see price mitigate this key level and then buy. And then look what happened. It just came down to liquidity from the low to discourage me from buying it. That's the thing when that happens with trading. It discourages you from buying it, and then boom, it goes straight to your direction. So most likely I'm gonna share this with you all. Most likely I will. But my time is up, and I appreciate you all for tuning in. And I'll talk to you in the next live stream. Have an amazing day, everyone.